For decades, Wall Street followed a familiar playbook. A promising startup disrupts an industry, burns through venture capital, scales rapidly, and eventually arrives at the same destination, an IPO. Going public has long been the ultimate milestone in corporate America, but Elon Musk may have rewritten that playbook entirely, and in the process, he has left many of Wall Street's most powerful investors watching from the sidelines. This week, a major shift is unfolding in the financial world. SpaceX, a company that remains fiercely private, is finding its way into some of America's most influential investment vehicles. As index rebalancing takes place this June, millions of retirement accounts and passive investment funds are gaining indirect exposure to a company that still isn't publicly traded. Think about that for a moment. A business valued at more than $200 billion has reached a scale where it can influence portfolios across the country without ever ringing the opening bell on NASDAQ. No traditional IPO, no quarterly earnings calls, no public shareholder pressure. Today, we're taking a closer look at the financial machine behind SpaceX. How did a private rocket company challenge Wall Street's traditional rules? How is it finding its way into everyday investment portfolios? And why could its reported plans for a massive bond offering represent one of the biggest power moves in modern corporate finance? Let's dive in. To understand why SpaceX has become such a fascinating financial story, you first have to understand the traditional startup lifecycle. Historically, private companies eventually needed public markets. Early investors wanted liquidity, employees wanted a way to cash out their stock, and companies needed access to larger pools of capital. Going public solved all three problems. But Elon Musk viewed public markets differently. He experienced firsthand how public scrutiny affected Tesla. Quarterly earnings expectations, short seller pressure, constant media attention, and endless debates about short-term performance. With SpaceX, Musk took a different approach. Instead of relying on public markets, he built a private capital ecosystem. Over the years, SpaceX has regularly organized secondary share sales, allowing employees and early investors to sell portions of their holdings to carefully selected buyers. That created liquidity without requiring an IPO. And it worked. The company's valuation continued to climb, eventually placing it among the most valuable private businesses on Earth. For years, many investors assumed an IPO was inevitable, but by 2026, it became increasingly clear that SpaceX didn't need one. And that's when the financial world began paying closer attention. Most investors assume that if they own an index fund, they're only exposed to publicly traded companies. Apple, Microsoft, Nvidia, Amazon. Simple enough, but modern finance isn't always that straightforward. As private companies grow larger and more economically significant, institutional investors begin looking for ways to gain exposure even without a traditional stock listing. That's where things become interesting. As SpaceX's valuation expanded, large asset managers and investment vehicles increasingly sought access to the company through private market structures, specialized funds, and indirect ownership arrangements. The result? Millions of investors may now have indirect exposure to SpaceX without ever intentionally purchasing a SpaceX share. And that raises a bigger question. If a company can reach this level of economic influence while remaining private, does the traditional IPO still matter? Let me know what you think in the comments. Is staying private becoming the new advantage for the world's most valuable companies? Or should businesses eventually answer to public shareholders? Because what we're witnessing isn't just another corporate success story. It could represent a fundamental shift in how capital markets operate. The old model was simple. Build a company, go public, join the financial system. SpaceX appears to be attempting something very different. Join the financial system without ever fully joining the public markets. Of course, even the most successful private company still needs capital, and SpaceX isn't building a typical business. Launching rockets, developing Starship, expanding Starlink, building global communications infrastructure. None of that comes cheap. The scale of investment required is enormous. So if you don't want to sell equity to public investors, how do you raise massive amounts of money? You turn to the debt markets. Reports suggest SpaceX is exploring one of the largest corporate debt offerings ever attempted by a private company. And that tells us something important. Institutional investors aren't just interested in SpaceX stock. They're interested in the company's debt as well. Why? Because lenders increasingly view SpaceX as more than a rocket manufacturer. Starlink has become a major part of the story. The satellite internet network generates recurring revenue from customers around the world, and recurring cash flow is exactly what debt investors like to see. be. For many institutions, Starlink transforms the SpaceX narrative from a speculative moonshot into a business with growing operational cash flow. That's a very different investment proposition. In many ways, SpaceX has reached a position where it can negotiate from a position of strength. Instead of asking Wall Street for capital, it's increasingly choosing the terms under which capital can participate. And that's a remarkable shift in power. But every financial advantage comes with trade-offs, and SpaceX is no exception. Remaining private offers flexibility. It reduces short-term pressure. It allows management to focus on long-term goals, but it also concentrates risk. Public companies operate under extensive disclosure requirements. Investors receive quarterly reports. Regulators monitor activity. Corporate governance creates layers of accountability. Private companies operate differently, and when a company becomes as influential as SpaceX, those differences matter. Consider the risks. First, geopolitical risk. Starlink has evolved into critical communications infrastructure in multiple regions around the world. That creates strategic importance, but also strategic vulnerability. Second, key person risk. Much of SpaceX's identity, vision, and leadership remain closely tied to Elon Musk. Investors have to consider what happens if that equation changes. And third, regulatory risk. SpaceX operates in one of the most heavily regulated industries on Earth. Launch approvals, environmental reviews, safety investigations. A major setback could affect operations, growth plans, and investor sentiment simultaneously. None of these risks guarantee problems, but they remind us that extraordinary success does not eliminate uncertainty. Sometimes it simply changes its shape. What SpaceX has demonstrated is that truly exceptional companies can reshape the rules around them. For generations, Wall Street decided when companies were ready for the next stage of growth. Today, companies like SpaceX are testing whether they can reach global scale without following that traditional path. Wall Street didn't necessarily tame Elon Musk. Instead, Musk built a company so strategically important and so economically powerful that investors continue looking for ways to gain exposure, even without a conventional IPO. Whether this becomes the blueprint for the next generation of American innovation or a model that eventually reveals hidden weaknesses remains an open question. But one thing is clear: the battle for the future isn't happening only in space. It's happening in capital markets. It's happening inside retirement funds. It's happening inside investment portfolios. And the outcome could reshape the relationship between private companies and public investors for decades to come. If you enjoyed this analysis, hit the like button, subscribe, and tell me in the comments, would you invest in SpaceX if it finally went public tomorrow? Or do you think staying private is exactly what makes the company so powerful? Thanks for watching.